Hello, everyone. Welcome. I've just had a couple of technical issues there at the beginning. I hope you're able to see me and hear me as we start this webinar today. And I'm just now going to hopefully bring the screens across so you can see them. Help SMEs get the funding they need. This is the theme for this webinar today. And I hope that you can appreciate what we are trying to convey as to this great opportunity that exists for accountants, bookkeepers to be far more proactive in the delivery of services to assist SMEs. Now, I know that SMEs already receive a great service when it comes to taxation. But how much does taxation returns and taxation advice help your clients to improve their business operations? In my experience, I've been an accountant for a long time, I don't think it really helps the clients. The ones that benefited most when I was running an accounting firm were the ones that we were offering what is now called advisory services to them to help them run their businesses. At least quarterly accounts, at least having a business plan and a budget and cash flow forecasts. And over the years, of course, we've had this opportunity to be far more involved in assisting clients on gaining funds for their business. And that's what we're going to talk about today. Up until only 8 years ago, the only opportunity to raise capital was under Section 708 of the Corporations Act, as it was from 2001. And prior to that, it was under similar sections in the various state acts. And that was rather restrictive because it couldn't be promoted or marketed or advertised. So let's go through the SME funding overview. I think accessing funding is one of the most significant challenges confronting SMEs. It is one of the most underutilised opportunities for accountants to offer to your SME clients. I've observed over the years from hearing stories and talking to accountants and talking to SMEs that many potentially great businesses stall, and some unfortunately have failed because they did not have the capital to take the next step and were either nervous about taking that next step if it was explained to them, or they just didn't get that advice. And that's unfortunate. I think accountants, business advisors, chief financial officers, bookkeepers can help to deliver these services. If not, other people will start to deliver those services. In fact, some already have, who are not accountants or bookkeepers. It's a great opportunity for our profession to be able to provide these services. So the resources are available to assist you to supply a great service. But we need to remember that funding is not one size fits all. There are variations that can depend on turnover. It can depend on the appetite for raising capital from the directors and key management employees. So funding in Australia is diverse. There's a range of options. And in the first instance, we're starting with Australian government grants because they're very large in numbers, over 1,000 government grants at any one time. I'm going to pick on a couple of the more appropriate ones when you look at raising funds for a business in this presentation today. The first grant that I would refer to is the Export Market Development Grant. Now, it's changed a bit over the last couple of years. It's administered by Austrade, and they are now entering into funding agreements for periods of 2 years. So there's some changes being made. If you helped a client 3 or 4 years ago, it was different. And now the application is in advance. So they've brought it into line with most other major government grants that the business is making an application in advance. One of the big variations of the Export Market Development Grant that you need to remember is it is not restricted to companies. It applies to any type of business. Sole trader, partnership, trusts, companies can apply for this grant. And there is a potential amount of government grant money available, aggregating $770,000 over an 8-year period. Now, of course, your client's got to match that, and there's got to be applications submitted, and then acquittal type reports prepared and submitted. And there are guidelines whereby Austrade is trying to ensure that the promotion of Australian businesses to export overseas is a worthwhile adventure, and that new markets are identified and hopefully exploited in the marketing sense to help people understand where all these processes are headed. The research and development tax incentive is another major opportunity that, in honesty, I find some accountancy firms are a little reluctant to be involved with in trying to bring this to the attention of businesses. I don't know why. And hopefully these comments will assist. So is your client's company, now that's one of the big differences, differs from the Export Market Development Grant. In the research and development activities, the applicant must be a company, and it can be a private company, an unlisted public company. And the company may be able to claim the research and development tax offset. Now, this webinar today is not just to consider research and development, so I've just listed some key attributes of research and development. Companies with turnovers under $20 million can claim a rebate of 43.5% of eligible research and development expenditure. And that is calculated at the tax rate for those companies, 25%, plus an incentive amount of 18.5%. That's how the 43.5% is determined. There is record keeping. There is documentation that must be retained, but there's no upfront application process. So it's not like the revamped Export Market Development Grant where an application upfront has to be made. In research and development, there is no necessity for an upfront application. However, your client could apply for a upfront approval so that they have some certainty that as long as they proceed along the lines as to what the tax office and Oz Industry have approved based on the client's application, that they will be able to gain that as the expenditure that's eligible for the research and development tax rebate. Now, we have a very comprehensive system within ESS BIZTOOLS to guide you through this process to help your clients. Now, one of the other benefits of the research and development for smaller companies, SMEs, that had an income of less than $20 million is that if they are trading at a loss, a claim can be identified as being made in the company's income tax return, indicating to the tax office that the client would like to receive the cash equivalent of the research and development offset, the 43.5% of the eligible expenditure. You have to tick a box when you complete the tax return. but you have to apply for that. It is not automatically granted. If it's not applied for, that tax rebate stays in the system for your client's company to utilise in a future year. Now, one of the comments I receive from accountants at times when I talk to them about research and development is, oh, hang on, Pete, we're not engineers or scientists. And I said, what's that got to do with it? And, well, you want us to do research and development activities. No one's suggesting that accountants or bookkeepers will do the research and development activities. That's your client's obligation. Your client's decided that they are able to undertake research activities to develop a new product or service. It's up to them to undertake the activities. But there is a wide range of record keeping that's required to be kept, which I've classified as being probably an internal auditor's type role. I think that's your role, to make sure that the forms are complete. We've included them in our system. We have 46 separate activity forms. Now, I don't think you'll need all them in any one client, but if you happen to have 10, maybe 15 R&D clients, and if you do, great, you may use the 46 over that period of time. But even then, I doubt it. But we've included them in the system in case you need that particular form. We also have flowcharts included in the system, 13 of them, to explain to your team, first of all, how all the various components of research and development mesh together. But most importantly, to be able to guide your client on this process so they can see how it all fits together. So think of your role as the internal auditor, and obviously you're charging for it. Your role is definitely not to conduct any of the research activities. Very quickly, you should be saying no to your client. That's nothing to do with you. Your client needs to undertake those with their team. And if they need expert assistance, they can hire people from universities and from specialist research organisations that are in the major capital cities around Australia and undertake the research and development. Then there's other government grants that are offered by the state, territory and federal governments, and also some local government organisations in Australia. There's over 1,000 of them. And within ESS BIZTOOLS, we have a list of these items, these grants, that you could assist clients to apply for. So there's plenty of it. And this is a way that your client can be funded for activities that they might be going to undertake in their factory or their workshop or their laboratory. But they need to remember that it's not a free lunch. They have to keep records as to what that expenditure relates to. And that's covered in our system. And if you want to know more about this, of course, we'll be featuring a research and development workshop in August, and we'll send you the details if you send us an email saying you want to be kept informed. Or if not, just please watch our communications through our weekly Accountants Minute articles or on the social media. And welcome to those of you who are watching us today on social media. And if you have any questions, and I should have mentioned this at the beginning, you will have to send us an email. Thanks, peter@essbiztools.com.au. Those of you who are watching us live, you can send me some questions on chat if you wish. And those of you who watch these videos at a time more suitable to you, one lady told me she watches them at 3 a.m. I don't really suggest that, but if that suits in your lifestyle, that's great. But if you have any questions when you're looking at this recording later on about any subject, please send me an email, peter@essbiztools.com.au, and I will get back to you. So now I want to move into another very important area. In fact, I think the main part of when we're looking at funding, other than seeking loan funds, of course, from the bank. And that normally requires security. Not always, Some of these new lenders that have emerged seem to be lending money without security, but they're doing a fair bit of research, and that's interesting, and your clients can raise money from them. But the first one I want to look at is early stage innovation companies, primarily because I find there's a misunderstanding of what this status is all about. It's a special status for young companies, so they're not incorporated as an early stage innovation company. Someone did contact me recently and said, I can't find where I can incorporate an early stage innovation company. Well, unfortunately, you can't. They all start off as a normal company, a normal private company, but they can achieve the status to be accepted by the tax office as being an early stage innovation company. So this legislation started about 8 years ago. At the same time, crowdsourced funding equity raising was introduced into Australia. So these two were stablemates, if you like. Early stage innovation company received the royal assent before crowdsourced funding equity raising, about 8 months in advance, actually. So the company needs to be involved in research and development activities or has strategic documents that they've prepared which clearly outline an innovative product development pathway. So there's two different streams there, and you'll see how they work together in a moment. An applicant has to pass 2 of 3 tests to qualify for the status of being an early stage innovation company. Now, test number 1, all companies must pass this test. Turnover of less than $200,000, not including any grant funds received from the Accelerating Commercialisation Grant, which no longer exists, but for new applicants, but there's probably funding still going through for some companies which were approved by the legislation which was introduced by the previous government. Expenditure of less than $1 million in the previous 12 months. So they're small companies, very small. And the legislation talks about the test time. So this is the time that this assessment to determine the status as to whether the company could be an early stage innovation company. The company cannot be listed on a stock exchange anywhere in the world. Very important. And the date of incorporation is normally less than 3 years, but there's some exemptions where a company can be up to 6 years of age, and that's fully summarised in our material. But as we're not doing this as a special webinar on early stage innovation company, I won't go any deeper at this stage. Now, test number 2. So they've passed test number 1. So they're a small company, and at this stage, we haven't asked any questions as to what they do. Just we have to supply answers. Their turnover is under 200,000 and expenditure is under $1 million. And remember, this has to be certified from the company's already lodged tax returns for the previous 12 months. So it's not just figures that someone can dream up. They're the actual that have already been declared to the Australian Taxation Office. Now, this test number 2 is called the Gateway Test. And there's 8 questions, and there are points allocated for the correct answer to the various questions. And a company needs to accumulate at least 100 points from these questions. And I've summarised what those questions are. Have they been involved in research and development and have spent at least 50% of their expenditure in the previous 12 months on research and development? If so, they earn 75 points. They've only got to get 100. So if they've had this heavy research and development exposure, they earn 75 points. If their research and development expenditure is between 15 and 49.99% of their expenditure, they earn 50 points. So that's pretty good also. If they were admitted to the Accelerating Commercialisation Grant that I mentioned a bit earlier, they earn 75 points. Now, there's a lot of companies who were admitted to the Accelerating Commercialisation grant, which were also undertaking research and development. So they could have accumulated 150 points. So they've self-assessed as an early stage innovation company. If they've been admitted to an accelerator program that's conducted by authorised presenters mainly in capital cities, they earn 50 points. If they've already raised $50,000 from arm's length investors, not associated people, they earn 50 points. If they've registered a patent or a plant breeder's right in the last 5 years, they can earn 50 points. And if they've the holder of an innovation patent or a registered design, they can earn 25 points. And if they've got a written agreement with a Higher Education Funding Act nominated organisation or the Research and Development Act, they can also earn 25 points. So that's the list you go through. And in the ESS BIZTOOLS system, we have a spreadsheet that's available to our subscribers, and you just enter what you are submitting for. And the chart will tell you whether you've accumulated 100 points, but you can do that yourself very quickly. The key point is, though, you have to supply supporting evidence for each of these activities that you're claiming points for. Within our system for the early stage innovation company, we have working papers for you to complete for each of these items, because proof's got to be submitted. You just can't say, yes, tick a box, we've collected $50,000 in money from arm's length shareholders. The tax office want to know from who, how much, at what date, and that information has to be recorded. Now, if you've accumulated the 100 points, there is no need to make any application to the Australian Taxation Office or Oz Industry at this stage. You've self-assessed, and we have a process that allows you, as the accountant for that company, to complete this form, because this whole process is about getting investors. You might be wondering why we're going through this story. Well, there's a special inducement supplied in the legislation, funded by the government through the tax office. I find that great, through the tax office, to pay an incentive to investors in these types of companies. Because this legislation was introduced when Malcolm Turnbull was the Prime Minister. And Malcolm Turnbull had a very good understanding of the frustrations, the difficulties that a lot of SMEs were having in raising capital. So this legislation was introduced, and it's got an incentive to encourage investors. Now we can turn to test number 3. Now, this is called the principles test. The company must pass test number 1. It doesn't need to even start on test number 2. It can go straight to test number 3 if it wishes. So this is really a company that, whilst they're incorporated within the 3-year period, have not done much at this stage. They haven't undertaken significant research and development. They probably haven't been in any grant programs, because they've been doing their planning. They've been doing their research as to what they want to achieve. So there's a different system for this type of company. There's 5 key questions that they have to answer, and not just yes, no answer. They have to submit a documentation. Now, I think it's at least one A4 page for each of these 5 questions. I've acted for an organisation, a couple of organisations, who actually produced independent reports from marketing type consultants, and we had 30 or 40 pages that were submitted as part of the application, because this is not self-assessment, the principles test. An application has to be then submitted to the Australian Taxation Office, and we've got all the documentation for that contained in our system that our subscribers, of course, access, and hopefully you will be able to do that also. Is the company genuinely focused on developing for commercialisation one or more new or significantly improved products? Very important words: significantly improved products, processes, services, marketing, or organisational methods. And you've got to support that by a document to say you are. Is there high growth potential out of this particular product or service? Can the company successfully scale that business? How did they reach that opinion? What made them believe that they can successfully scale? They need to document that. Address a broader than local market, including global markets. The government is very keen to encourage smaller companies to start exporting. Sometimes that's exposing them to a lot of commercial difficulties in trading overseas, but it's not necessary, but they're really looking for companies that are going to be exporting. And is there potential to have a competitive advantage for that business? Now, some of these questions are very similar, but that's the 5 questions. So the process is, within ESS BIZTOOLS, we have worksheets for each of those 5 questions for you to summarise your response, attach the report if you've received an external report, made sure the directors sign off on this, because this is a declaration from the directors that this is what the company is going to be genuinely focused on achieving. The application goes to the tax office. They have a coordination with Oz Industry. Oz Industry contain people who are experts in a whole range of R&D type activities and planning commercialisation activity. And they assess. I'm told by the ATO takes about 6 weeks. They issue a reply. And if they're satisfied that the company has achieved the status of being an early stage innovation company, they issue a certificate to them. So they have a certificate to put together with the other information that we've assembled to enable them to sit down then and have discussions with investors. And that's what I've said on this slide I've got in front of me. So the people completing the principles test receive a certificate from the ATO. I've had some people ring me and say, oh, we can't get a certificate and therefore we can't approach an investor. And I say, well, and what test are you seeking to justify your status claim? And it turns out it's under the gateway test. Well, I said, well, you don't have to do that. But I would suggest that you really complete the documentation that we've included, because if you were switched roles, you were then advising a potential investor, you would want to make sure that this claim that they have self-assessed is watertight, wouldn't you? Because if the claim that the company has self-assessed is subsequently rejected by the tax office when they ultimately receive all the information, your client's not going to be very happy if they've contributed $50,000 or even, let's say, $1 million into this company, because they won't receive the benefit. So let's look at what this benefit is. A benefit for investors. The investor receives a tax offset based on the amount of their investment as part of the status process. That's very important. It's part of this status process. The maximum rebate for a sophisticated investor is $200,000. So that's been calculated, obviously, on $1 million investment. They can invest more, but they'll only receive a $200,000 tax credit. And for a retail investor, the maximum credit is $10,000, because the maximum amount that a retail investor can invest in a company trying to achieve the status of being an early stage innovation company is $50,000. The government was keen to not encourage retail investors to be going out and putting a lot of money into one company. The government took the view that sophisticated investors are experienced enough or have advisors who will guide them on their investment decisions. So that's the first part of it. So there's a tax offset. If the investor can't use it in that next year, and this will be all available to them in the following year, so the year after, the tax year after their investment, because the company is not required to lodge details of who invested with them as part of this process until the 31st of July in the next year. Now, if the person who receives these shares as part of the status application holds those shares for longer than 12 months and less than 10 years, they pay no capital gains tax, none at all, when they sell those shares issued as part of the status application. If they hold the shares for longer than 10 years, they can revalue the company at that, or their investment in the company at that stage. But after that, they will pay capital gains tax. When the government framed this legislation, they knew that a significant number of these investors traditionally would have exited within 10 years. And your client's company that's raising this money needs to be familiar with that and aware of that. These investors are not looking normally for a lifetime investment in the company. So let's now move on to the stablemate of early stage innovation companies, crowdsource funding, equity raising. There's no investor incentive in this one other than they receive shares, but let's look at it, because this has proved reasonably popular in Australia. I think there could have been a lot more applications made. But let's look at it. It applies to any type of company, private or unlisted public company, that has a turnover internationally, if they're trading internationally, of less than 25 million Australian dollars. And the gross value of assets owned by that company and its associates internationally, less than $25 million, and cannot be listed on a stock exchange anywhere in the world. So that probably includes a fair number of SME clients in Australia could be eligible for this. There's no industry restrictions. There's no other restrictions. The money needs to be invested into the business, though. So they're operating any type of business, and they could raise up to $5 million from the public. Now, this is the maximum raise. If they also raise some money under Section 708 of the Corporations Act, 5 million is the limit. But so if they've raised money nowhere else, under crowdsource funding, they can raise $5 million in a 12-month period. And then they can go back and try to start the process again the following year if they receive the approvals. The company directors and management team need to have an understanding. I think it takes, my experience anyhow, of talking to clients, 3 to 4 hours to sit the leadership team and the management team down and work through the whole process. That's what I do with people on this, because it's very important they understand, and that they understand what this person, it's called the crowdsource funding intermediary, who they are. They're people with Australian Financial Services licenses, how they were appointed. ASIC called for applications. They got over 380 originally, and they appointed a number of people which aggregated to around 16. So they have licenses. They're in the capital cities around Australia, and they are the representative of the government through ASIC in this whole process. They report to ASIC very diligently, I've found out from a few meetings that I've been at. And but also they are a broker. They promote, they have lists of potential investors in these type of companies. So they're wearing two hats. And they are paid a fee for successful raising of funds. And they've negotiated the percentage of the capital raised or whatever other arrangement they want to enter into. They could accept shares in the company if your client's happy with that, and obviously if they're happy with that. So applications to acquire shares in this process have to be made to the government-appointed intermediary. So your favourite aunt can't just give a director $100 as part of this capital raising process for shares. She has to go on to the intermediary's site, which is their website, and along with all other investors, answer the questionnaire that the government included in the legislation. And that's a questionnaire to get their acknowledgement that they understand what they're investing in, they understand the process, they understand that unfortunately they might lose all their money. And it's a bit hard to explain to an old aunt, I know, but that's the process. I've already talked about the dual role that they have, and people need to understand this in this process. Now, there's no prospectus has to be produced like there would be in an initial public offer for going onto the stock exchange, but there is a document called the crowdsourced funding offer document. You won't be able to prepare that unless you've got a business plan and a budget and a cash flow forecast. Not so much the budget and the cash flow forecast, but you need to help your client, first of all, on a business plan, and then the crowdsourced funding offer document, and then that culminates in the crowdsourced funding offer document. Now, that includes a lot of information on the company's history, on the shareholders, the directors, the leadership team members. If anyone's ever had a problem with ASIC in the past and suffered a penalty, they may want to consider whether they wish to be a director or a senior executive in this venture, because that information will have to be disclosed under this legislation. But $440 million has been raised by companies who have been accepted into this process. One of my real concerns is that 16 intermediaries at least have been appointed. It would appear, from what I gather watching the marketplace and listening to people, 2 or 3 of the intermediaries are pretty busy putting deals through, and the others are really not doing anything. They've gone back to their other financial services industry work. That's unfortunate. 2 of the main intermediaries have produced reports each year, and basically some of their information's basically the same as you'd probably expect. They really only activate about 3% of the inquiries they receive. And then around 75% of those actually raise capital from the public. Not everyone's successful. It would be great if there was more deal flow put to the intermediaries. $440 million has been raised for a fairly slow participation by the industry. I would like to see more accountancy firms be far more proactive in promoting the benefit of crowdsourced funding equity raising, so that your clients can raise money. Some people, oh, I don't want shareholders in my business. Well, it's a great way to get some cash to enable them to do things. And if they run out of properties that they can mortgage, it's a great way to go. Now, in our system of ESS BIZTOOLS, we've got a complete product package on crowdsourced funding equity raising. And we will be presenting a follow-up webinar in August, September on crowdsourced funding equity raising, which you may be interested in if you want to have more information. If not, send me an email and we can have a complimentary 40-minute Zoom meeting just to go through the alternatives. And then we're going to go to Section 708 of the Corporations Act, which I've had a lot to do with over the years, because under 8 years ago, this was the only way you could raise capital for a private company in Australia. Section 708. And that only came into play in 2001. And prior to that, it was embedded in the state legislation. So generally capital can't be raised without issuing a prospectus. That's the general rule. There are restrictions on how this type of capital can be promoted. So under 708, it's possible to raise capital. It's a maximum of $2 million from 20 investors in a 12-month period. So you'll hear it called the 2012 rule, but you cannot promote it or market that you're trying to raise capital. What I didn't mention, I was talking about crowdsourced funding equity raising, is once the company is accepted into the process by the crowdsourced funding intermediary, there can be marketing and promotion that the company's trying to raise capital. That doesn't apply to Section 708, and nor does it apply to the early stage innovation company process. So You've got these variables that are occurring. But coming back to 708, so your client can raise $2 million maximum, 12 investors. You need to be aware as you're issuing shares to new investors, the 50 shareholder limit for private companies. Just keep an eye on that. Could be a bit embarrassing. So the capital raising process is required. I think you need to have developed that within your firm. We have it within ESS BIZTOOLS. None of these capital raising processes are going to work without the business plan that I referred to earlier, and I think the forecast needs to go for at least 3 years if you're trying to raise capital from the public. You need the predictive accounting reports. That's the business plan, the key drivers. The key drivers is looking at those very important sub-accounts: inventory, debtors, creditors, work in progress, capital expenditure, research and development projects, and perhaps some other special projects. That the investment into those things in some budgets and cash flows I've read are virtually hidden within the documents. My concept is that these key drivers are highlighted in separate sub-accounts that are available as part of the budget papers, and that's how we propose that people prepare them. Obviously, all that then flows into the cash flow forecast and then into the projected balance sheet. The key output of all this is you can be the storyteller. You can sit down and talk to your clients and advise them how all this process is going to end up and what their position is going to look like. You're going to need current financial accounts. You need a share valuation of the company in its present state. You need the value of shares being offered and a summary of the capital structure, both before and after the capital raising process, because all that needs to be submitted. And most definitely, that full summary is what applies to crowdsourced funding, equity raising, capital raising that the intermediary will want to see. So what's your role in this growth finance? Your client needs funding to be clearly defined growth strategies, and they need forecast budgets and cash flow tools. Your client needs to be funding ready. By that I mean that they have a strong value proposition for grants or for capital investment. They have timely and accurate documents. They have confidence navigating regulatory and reporting requirements. They have a board of directors who understand their roles. And in some cases, your clients may have to reinforce their board of directors by appointing 1 or 2 other people. And as they raise capital, there may be a request to appoint 1 or 2 other people representing those investors. And this is the discussion you need to have with your clients first. Whilst I'm a strong advocate for helping our clients to raise capital along these lines, we need to make sure that our clients understand the process. They understand they're going to have shareholders. They understand that there probably will be requests for some additional people to be appointed to the board of directors. It's best to have that conversation before the event so they understand that. So ESS BIZTOOLS can assist you. I'm very proud of the products that we've developed over the years to assist accountants, business advisors, chief financial officer service organisations and bookkeepers to help SMEs with this wide range of commercial matters. So we have a commitment to assist you to deliver these services. Our documentation covers every item that I've mentioned in this presentation and probably tenfold more, because there's a lot of information that needs to be looked at to make sure that you're guiding your client along the right lines. So you want to know more? I hope you do. Why not send me an email? And why not visit our website, www.essbiztools.com.au, where we will outline to you the financial, commercial, management, accounting, advisory services product packages that we have available to assist you on the delivery of these funding type opportunities for your SME clients. because I think it's important that as a profession, we're helping the SMEs to survive and thrive in the current difficult conditions. Highest business failure rate we've had ever in Australia. There's a lot of problems out there. And SMEs need far more input than an annual set of accounts and a tax return. Unfortunately, that does not help them. All that does is help them not to have too many problems with Canberra. Doesn't help them run their businesses. There's government grants out there. There's people interested in what they need is to make sure that the accepted processes for a company trying to raise money have been followed so that the investor can receive proper documents. There's a significant fringe benefit to all this. And in fact, I think it's a major benefit. It's not a fringe benefit for accountants, bookkeepers, etc. And that is every accountant or bookkeeper that I talk to talks to me about, oh, can you help me get some staff, please, Pete? I say, no, I can't do that because I've got accounting firms that we're supporting all over Australia. I'm not going to get involved in pinching staff for one firm and going to another. But it is a huge problem, and I'm aware of that. This type of work that we're talking about can be interesting, challenging, and exciting. It's a variation from tax returns. Let's face it, tax returns can be a wee bit boring at times. And this younger generation, I'm sure we've all started to realise, wants variety. This will help you have those sorts of products. But it also deliver a range of services that you can grow with in supporting these clients. Because a lot of them will need chief financial officer services. They won't raise enough money or be big enough or want to even employ a full-time experienced accountant or chief financial officer. So that's the real deal that you can then offer them. Now, they may grow too big down the track that they grow beyond your firm's ability to support them. Well, it's been a great journey. Hopefully you've learnt a lot and you're ready for the next potential startup or company that's wanting to scale up to become a client. So it's part of the process. If you would like a complimentary 40-minute meeting with me to go through how your firm could really get involved in offering advisory services with a strategy to achieve over a few years a 50-50 split between taxation and tax returns and advisory services, I'd love to talk to you because I think that is the future of accountancy services in Australia. Why not send me an email, peter@essbiztools.com.au, or you can give me a phone call, 0418 190 181. Have a great day, and I look forward to hearing from you and talking to you in future webinar presentations. Have a great day. Goodbye. I look forward to hearing from you. And thank you for the messages that I've received for some people. My apologies for the bits of problems we had at the beginning there. I've got to research what went wrong there, but thank you. And if you have any questions, please contact me. Goodbye.